Wednesday, August 2nd, market analysis, Stan Ehrlich. Good morning, 9:53 California time, just a little after the middle of the day, and what a day we have. Well, I've been talking about this market heading south for approximately 2 weeks. And I, again, start out with stock market indexes and usually the spider, which is the same this morning. So during the last couple of weeks, we had for the SPY a bearish engulfing ER sell signal last Thursday. Friday, the market managed to rally up a little bit more than I wanted. And Monday of this week was even a little scarier because it closed higher and made a minor new high, but it did not hit our protective stops and turned down slightly yesterday, nothing particularly dramatic. But today is the day. We gapped down, and that's a good thing. Someone might say this is a downside breakaway gap, and it certainly is in approximately the right place for that. So I wouldn't say no to that, but downside breakaway to how much of a break is basically the question. I don't think this bull market is over by any stretch of the imagination. I don't even think there's going to be a substantial percentage retracement of the bull move. I am looking for, and I have said so for a couple of weeks now, if not maybe 3, 444, give or take a half a buck. We are down to 50.5 right now, and currently down 5.8 on the day, almost 6 points lower. So we're halfway there in one day to my 444. That is my minimum. Could go further. Downside objective, which I've been talking about again for over 2 weeks. Now, at this level, we start support, and we could be getting close to being oversold, which would be great. Right now, the RSI is very neutral in the 40s, elbow room, tons of it to go down more. Apparently, we're going to have a new low close for the last 10 days or so today, and we've already made those new lows for 10 days. So with a new low close below previous lows, that would be a plain old everyday downside breakout. Now, the top is not that big a deal, a couple of weeks. But the fact that we got a bearish engulfing smack dab on top is great. And I'll show you something I haven't displayed before. Here is the S&P 500 E-mini, which has significantly longer term trading hours, longer trading hours. We have, and I don't think I can say this ever before, 3 bearish ER sell signals in the last 6 days. And within 5 days, we had 3 signals, which is just crazy. And yes, one of them last Thursday was the high of the whole move so far. Today, we have a sharply lower market, but because of the overnight hours, we did not gap down on the E-mini. On the SPY, we certainly did. And so I pay attention to those gaps on the old-fashioned trading time frame indexes. Let's take a quick look at the DIA, which yesterday made a new high for the whole trend up, and the closing price was not quite above previous highs a few days earlier, which contained a bearish ER sell signal. So I keep saying, I love it when the top and bottom is red or green, and we get a signal at the major turning points like October 13th, and many other examples I can quote, but that's the most profound one in the last year or so. Now, this, like the spider, is not that big a deal. I'm just glad I'm right at this particular point. We haven't yet even made a new low for 4 days on the DIA. It's been the strongest in the last few weeks. It made a new high for the trend where nothing else did yesterday, but it got overbought. And it was at the high end or even a little bit above, basically the high end of a resistance area. So here we go. I totally expect the DIA to make it below last Thursday's low and come down to close a very small gap at around 350 and a third. Let's zoom in on that a little bit. And this was only a couple of weeks ago, between July 18 and 19. And the bottom of the gap is more accurately almost exactly 350.00. So that's what I'm looking for a minimum downside objective for the DIA. Now there's a chance it could come down even more, and that would be into a support area, which would be starting at about 345. So below 345, I'm going to get bullish if it gets there in the first place. I'll be watching for buy signals when we get to 350, but that's not very far away. And I think we're probably going to easily get below that. And again, my downside probability is 345, oversold conditions when we get there, approximately a week, maybe 2 at the very most, and then start to turn back up again. Okay, it's working. QQQs, like the spider, gapped down. And it is noteworthy that in the last few days, the Qs could not get even back up to that resistance area that it hit a couple of weeks ago for only a day and a fraction. The only thing I regret is we didn't get any bearish red ER sell signals during the last couple of weeks like we did in almost everything else, which tells you that the Qs lately, last several weeks, have been a little bit weaker on the average. It looks like the S&P is kind of caught in the middle between the two. So the weakest with a lack of ability to challenge or make new highs, it's kind of neck and neck with the S&P. Okay, so new lows for 10 days. We have a gap to close, of course, and that would be down to, let's see, hang on just a second. I'm going to ignore that. This gap area here. So that would be 368 and a half. Let's call it 369 for the QQQ. And that could happen very quickly. So what's next? That is also the beginning of a support area, let alone the closing of a gap. The next area would be down to like 358. And there's a little bit less definition on the Qs here on the way up because it was so strong, so quick, so fast. It never did back up too much or spend too much time in a trading range. So this one might be a little trickier to peg which price level it's going to get to and stop at. But my best choice at this moment would be 357 3/4. Okay, let's look at the Russell for a second. This is a very important day today with indexes, major breakouts. The Russell had a bearish engulfing at the high of the move, and that worked only a day. This Monday, we have a higher high and a higher close. Normally that's a bullish situation, but we're still right up against some tops back in January. And we were overbought, and we did have a bearish engulfing, although it didn't work. Now it's being caught in the bear swing with everything else. And I fully expect it to come down to about 180, let's call it 190 flat, this green dashed line. And from there down, there might be a little more gravy, but we're going to get close to oversold. Everything's going to line up in a week or two at these lower levels. And then we have another significant buying opportunity in the indexes. Whew, great. Bonds. The bond market, go to this one. Whoa, sorry, has made new lows relative to the 88-day cycle low, which worked great for about a week and a half, but a very significant swing. Now we're oversold again. This kind of looks like a downside breakout, but it really not, in my opinion, oversold conditions, making new lows, but still in an area where it bottomed out a few months ago at pretty low levels historically, with a very wide sideways so far, sideways trading range. If we turn up right away, and I think we're about to, then I'm looking for the rally up to 125, probably up to 129 and a half. And if we can get to that level and keep going, we have a chance of a very, very long-term bull market breakout at 134, which I'm fully expecting before the end of the year. So I think this low coming up very soon, today, next couple of days, maybe a little lower, not much, is going to be a significant turning point. And the same thing applies to, just a moment, and I should be changing charts and it's not. Oh, sorry about that. Here we go. E-mini bouncing very slightly on the spider, that is. First chart, second chart is the bonds. That's okay, looking good. Now, 10-year notes did not make a lower low than a couple of weeks ago with the 88-day cycle low. It's holding up a little bit better. It's not oversold, not that it will be, but it's doing slightly better. It looks at the moment very much like the lows that occurred a couple of 88-day cycles ago, where it came down close to making a new low and then turned up in a support area. Hey, we're in that damn support area, same thing. Maybe a hair under, but still basically the same. I would not be surprised if we turned up right away. Next chart, crude oil. Yes, indeed. I warned you. Historical resistance area, and overbought conditions for several days. And today is the day. We now have a bearish engulfing ER sell signal in resistance in overbought conditions, a great combination in my opinion. We're heading back down, in my opinion. We'll be getting back down probably to 73 and into this large support area and see what happens next. But this is the start. Remember, ER1 gets in the same day, that's today, and it's already short that the green or red bar occurs. It gets long or short the same day of red or green. ER3 gets in if there's a retracement and you're able to sell short, typically speaking, for sell signals at a little bit higher prices than ER1 did. But you have no guarantee that you're going to get that retracement and get the opportunity to sell it short where the little red dots are, around 80.71. So actually it's 80.72 exactly at the moment. If we make new lows or highs, and it's probably not going to be new highs before the end of the day, then our trigger point to go short is going to change slightly. This is it, beginning of the bear move. Next is heating oil. Ta-da! Same commentary. Pretty much don't need to say another word. Both of the energy markets, bearish engulfing, now a little bit above the resistance area, true, but yesterday's close was smack dab on top of that resistance. Even though it poked through it a little bit, it didn't stay up there. And today it did the same thing, but it flopped right away to a major bearish ER sell signal. Frankly, looking a little bit similar to the one that we had back at the high on January 24th. I certainly hope this one works just as well, if not better. It could. Next chart. Natural gas is already on the way down, has today made new lows since late June. So we're talking a month and a half. And it probably has a little bit more to go on the downside. But the main thing here is we have lows at these prices and a little bit lower back in April. Then it did it again in May, and then it did it again in June. May and June were oversold conditions at the bottom and turned up. Unfortunately, no signals. Now we're getting very close to oversold, not quite yet, and very close to those same price levels that it bottomed out at before. Guess what? It's going to bottom out again, I think, in the next few days. It might take into the beginning of next week, but pretty damn soon here. Next, gold. The two sell signals in gold and silver that we got recently are working fantastically. End of story. New lows coming up. Silver, fantastically. End of story. New lows coming up. Platinum, never got a reversal, unfortunately, just the overbought condition against the bottom of a previous bull trend line. We have new lows again today, as we have had almost every single day since the overbought condition and trend line test. So I'm looking for at least 900 and below that, more likely than not. And around the same time, of course, that the gold and silver make new lows for extended periods. Next, copper had a new bearish engulfing yesterday, and we're down sharply today. I'm having fun here. Next, the sell signal we got almost on top of the soybean market. It has worked so far great. In fact, today we have another ER bearish sell signal. I kind of call these complementary because we're already on the way down, and you don't need to put another nail in the coffin, so to speak, but this happens. It happened in silver not long ago as well. And there's something else that just happened in recently. We have 3 bearish engulfings. One of them is almost the high day during the last month or so. And today we almost made new lows for that total time frame. I believe absolutely that we're going to and drop into this blue support area, which I don't think now is going to be enough to stop this decline. This soybean top looks very much like I would have liked it to look approximately a month ago when it was challenging the highs from June of 22, a full year earlier. And I was talking about a very broad double top historical major top formation going to cause a bear market in soybeans for maybe a year or two or something like that. Now I'm going to bring those kind of commentaries back into play, even though it's not a double top or a very classical looking one. We certainly didn't do any extreme bull move. It didn't stop on the way down at support, and we're getting hammered with new sell signals on the way down. This implies to me that we're not going to stop at the beginning of support, and we very possibly, probably, in my opinion, get down to 1150. At that point, boy, oh boy, you're on the edge of a major breakout to the downside, long term. So let's see how it acts when it starts to get a little bit below today's low so far. We did come very, very close to being oversold. So I will not be a bit surprised if in the next few days we bounce back into the middle of today's range and to get the opportunity to go short based on this today's signal. Now, remember, we do have to stay lower on the day. If it closes higher than yesterday's closing price, the red bearish engulfing will disappear. But I'm not doing my YouTube after the close. I'm doing it now. Next, soybean oil will get dragged down probably with soybeans. No reversal at the top, just overbought. So I'm looking for a move down to probably at least 54. And probably lower than that, but let's get there first. Next, a new bearish engulfing soybean meal sell signal, just barely qualifying. I don't like sell signals when RSI is already as low as it is, but it's not oversold and it's not canceling out anything. So down we go. And I'm fully expecting 363 to be challenged, 364 to be challenged, 65 right in that area. And it'll be about a week. Next, corn, no signals lately. Well, we had a bullish one that was a little premature, but not as far as tops are concerned. It just plain flip-flop back down again at a bearish long-term bear trend line, which had already gotten a crack in it because it was broken, but didn't stay that way a month ago. So here we go. We're coming close, sort of like soybeans, to major historical support levels from approximately a year or plus ago. Yeah. And that could be super bearish long-term in corn. And corn actually has another potential double top, sort of like soybeans, which made higher highs. Corn was not able to make higher highs, and we're already down to support areas in corn, fairly close to oversold, but not quite. So I think it could even make a little bit of a new low. Let's talk about 467-ish and bounce for a short period. But it looks like the guillotine blade is starting to drop. Next, wheat. A bearish engulfing today implies it's going to head lower. I totally agree. I expect these lows to be challenged, but we're not far from oversold already. So let's not get ahead of ourselves. Probably dropping off to, I'm saying 615-ish soon, real soon. And will create oversold conditions and somewhat of a bounce. And it'll start to look like a big sideways trading range coming back up and down again. But we'll see if it can hold or not at support. The long-term trend is down. I am long-term bearish. Can't help it. And I'm so glad we did get a sell signal, by the way, on the 8th of March, the beginning of the war, smack dab on top of an incredible series of limit up and locked all day, limit up days in a row. That is, I suppose, pretty much unheard of, that you would get a sell signal on the high day under those conditions, but that's what the system is built for. Next, on the top of the market, live cattle. Yesterday's rally was not totally unexpected, kind of typical, in a bear move. And today we're coming right back down again. So the next move now is to make new lows. I really would not like it very much if it got above and stayed above yesterday's high. So if you have a longer term, intermediate to longer term position, you might consider yesterday's high as a approximate location for an exiting buy stop from a previous short. Next, lean hogs, not much to say, sideways, waiting for something to happen. Next, OJ on top. We got finally our sell signal a few days ago. Yesterday, we got short at almost the high of the day. And remember, ER1 is already short from Monday. ER3 got short yesterday, and both of them are smiling like Cheshire cats. We are sharply lower, making new lows for several days, and on the way down. How far? Well, the first spot would be 290, but I think that's going to be easily reached. The next spot is going to be much more important, around 275. So let's get there to 275 and see what happens. That's the beginning of some fairly decent support. From there lower, you've got a variety of support levels that the market would have to deal with, and a little bit of a short-term trend line. Let's see what if I do go backwards on this. Not quite what I was expecting, and I thought maybe it would, clip off these lows. Let me tilt it a little bit. Well, that's not doing the right thing. Nah, this isn't going to work quite like I expected. Well, that's what I was guessing, and it's not that bad. All right, next chart. Cocoa. Bull trend line has to be dealt with. We did get a sell signal yesterday. Today's high is just a little bit too high, and we got stopped out of our new short yesterday, and any new short that the ER3 would have had this morning at the red dot, and it went right up and poked us out of the trade. Now, our trading system says we do not re-enter, but some people might consider doing so, maybe if it gets below yesterday's low and starting to show that the sell signal was actually not bad. But according to my system, we're out, a couple of small losses, we're flat. I'm not going to be surprised if the market does top out. If I get another sell signal, I'll be very, very happy about that. But let's see what happens. Cotton the rag, another ER sell signal on the top. Not only that, ladies and gentlemen, we have 86.30 for the trigger to go short. The high of the day 2 days ago was 86.31. You sold the high of the day for all practical purposes. Today's high is 86, did I say 36? 86.28, not quite up to 30. But hey, if you missed it yesterday and you wanted to jump in, well, you came so close, it's ridiculous, even on the close. And today, kaboom. So I'm thinking there's a very good chance we could make a new low for the last 4, 5, 6 days, is it? About 6 days, yet today, if not tomorrow. And we should be on our way down. The good thing here is that the rally was almost perfect to the middle, well, to our trigger, which is a calculated price. It is not exactly the middle of the engulfing day. Next. Sugar, the sweet. Not too much to say here. I do think there's a very good chance, but I'm not getting any signals for it to drop off to, around 21, 20, in fact, 20 and a quarter, and into that blue zone where there is some decent support. You have to deal with 2180 first, and that is a minor previous low support level. So we'll see what happens when it gets there. I think there's a strong likelihood it will. Coffee. My last future chart, rallying a little, got some buy signals that didn't work particularly well, but they again happened during and not necessarily the highest high or lowest low always, but often they are. So I'm looking for a little bit more strength, and that's back to the E-mini, which is bobbling around a little bit. Let's check real quick here on the 1 minute E-mini chart to see what we are showing. And this is the spider, same thing, basically different numbers. And maybe we hit a low for the day, a little double bottom, held at support on the next decline, trying to make new highs, but not very convincingly for, of course, very short period of time, a couple of hours. I doubt sincerely that if we get any more rally, it's not going to go very far. And I don't think this gap is going to get closed soon. Remember, I wanted to go down first a lot, and then come back and close this gap. You guys have a great day. Thank you very much. Signing off.